Hey everyone, happy Saturday. Welcome back to this is our third episode of Stock Market Saturdays, and today's topic discussion is going to be about Africa and its market and the few ETFs I am looking at right now in 2025, the latter half to start investing in 2026. So, today's agenda, it will be an introduction slightly. Then we're going to talk about the pros and cons that I have been able to ascertain so far with me trying to invest in the African market. Then I'll talk specifically about the ETFs that I was able to find. Uh, Spoiler alert, there aren't that many, but there are some, and we just need to start with one, at least at the moment, or two or three. And what else? The top contenders for my 2026. Note that I said my. I'll talk about that probably in the next slide or two, and then the final takeaway. So, introduction. Just some housekeeping things. I want you guys to know that this is not financial advice. I'm not a financial professional. I'm just a nerd, and I like to look things up. And this is an overview of my research for my capital MY investing goals that I share with y'all, my YouTube community, because we tend to have a common interest of investing into the stock market. Nothing more than nothing less. Anything that you try to do with your personal finance is personal to you, and I am not claiming to be a professional at all. So seek a professional out for before you do things. All right. So the reason why I ventured into this is because this is my first year of investing outside of my retirement account. 2025 will be like a whole full year. I did technically start September 2024, but it was like very small compared to what I'm doing now. And I have been seeing that there has been a downward trend in the American market. And I am over leveraging the American market. So I want to go ahead and sow my oats in other places. And I started thinking about this in the beginning of 2025. And like I said, the last time I talked about the European market investing, I'm already too late. Europe is doing really well. Other markets are doing really well. And Africa is also a market that is doing very well. And so it's exciting to put my eggs in these different baskets upon doing this research. Excuse me, I do have the sniffles. Allergies are always bothering me, it feels. So this is why the diversification is going to be needed in my portfolio. And I think foreign market investing is essential. So 2026 is the goal. I'm going to be investing in several foreign markets. And it's not going to be a lot because my money is limited. But starting now, as little kernels, so it can be an acorn. Not an acorn. The little acorn kernels can be a big oak tree in like 30 something years. Using this last half of 2025 to do the research. And my foreign market interests are Africa, Asia, South America, and Europe. My first episode for Stock Market Saturdays was on Europe. And today we'll be discussing Africa. And then the next couple will be Asia and South America. Not sure which one is next. Stay tuned. It'll be a surprise. So now we're going to talk about Africa specifically and the pros. Guys, forgive me for my camera. I don't know what's going on. I'm not like an angle. Forgive me for that. I'm gonna figure that out. But right now, I feel like it's important just to get it out there to stay on schedule. So yeah, forgive me for that. But the pros that are going on in the African market right now is that they are having a lot of infrastructure investments. They're not young countries at all, but they are behind as far as the rest of the world goes in how developed they are. They are not as developed, right? And in doing my research, I found that there's a lot of money being put into hospitals, being put into roads, being put into city necessities, university systems, and etc. And there's money in those markets that it creates. So that's a pro. They're also investing in digital services and fintech development. There's a lot of applications that we have on our phones. I guess there's not that many in Africa. And so they're working on putting like everyday things into an app that is useful for the everyday African, especially financial tech type of development and applications. Another thing that is kind of like a old fashioned thing that tells the test of time in anywhere you go, because tourism and agriculture is pretty much everywhere you go in the world. But they have particularly seen rebounds in certain parts of Africa. And I want to make note that, particularly for this continent, it is very severed in a way where like certain things are growing in certain areas and other things are not. So tourism agriculture is particularly happening going on in Eastern Africa, and the digital services and fintech stuff is going somewhere else, and the infrastructure is for sure going on in West Africa in my research. So it's not like one size fit all, but these are like the common things that showed up in my research and pose as opportunities for people who are wanting to invest. Also, they are also focused on cleaner energy from natural gas. That is one of the many resources Africa has, and they are a little bit more forward thinking about the opportunity they have to take their natural gas and make it into cleaner energy, similar to what Europe is doing and opposite of what America is doing. America was doing that last administration, but we go back and forth. But I think other places in the world, particularly because Africa is affected a lot more, any part of the global south, they're affected more from climate control. So they see and the prudence in investing in cleaner energy. And then this last part I already kind of talked about, where I said the foci are regional. East, west, north, and south regions are different. And according to my research, Eastern Africa has the highest potential. Now, some cons. Cons are tariffs. You would think we'd get away from tariffs when we're not talking about the American market, but we're not. They are proving to be a challenge for everybody in the world. And with Africa apparently getting a lot of stuff imported to their countries, they have to deal with these new founded issue of tariffs. Another con of investing in Africa right now is that there is geopolitical insecurity in certain parts. Again, not all parts, but there is geopolitical insecurity. And this is very on time for what's going on in the world, because over there in, what is it? I think it's France. They are going through geopolitical insecurity because Africa, the last year or so, has done an about face about what they're willing and not willing to allow in their country. And right now it's seeming that it's working. And hopefully it is, because Africa should be able to self govern and figure out its own destiny without an outside country dealing with it, right? But change is not always a secure thing while it's going on. You need more time to get to the, like, for sure secure position that you want to be for your country. And then the last con that I found was that overall reliance on foreign national aid is a, a foible in their plan, because if you're relying on foreign countries, if they ever decide to take that away out of necessity or out of desire, that can ruin your like financial plans, because now you have to put money into where you were thinking that another source was going to give you that source of income. So now I'm going to talk specifically about the ETFs that I did find. And I put in parentheses here that I like to describe ETFs really quickly as a basket of stocks. It is a simple explanation for me. And I found, unfortunately, I found three. So I'm fortunate, but unfortunately, because I was only able to find three that had a lot of information on that. And that is because there are a lot of stock markets in Africa. Like South African stock market, Nigerian stock market, Egyptian, Cairo stock market. Again, it's fragmented because there are so many countries. I think there are 54 countries in Africa. And unlike Europe doesn't have 54. They do have a lot of countries, but it's not 54. Same thing with South America. So there are challenges. Like, it's not like a united front. Their markets are different and they have different stock markets. But the first one that I found that seems to have the most information was the iShares MSCI South Africa ETF with the ticker EZA. This ETF currently is about $60. And what I found was that it captures 85% of the South African corporation equities based on the MSCI South African 25 to 50 index that follow mid and large cap companies. So South Africa as a country has a index, at least one, and it's this one that it follows is the MSCI South Africa 2550 index. And this particular ETF has 85% of its money invested in South African corporations that do their business there. The dividend yield is 5.02%. I should have put percentage there, my bad. And dividend growth, which is wild, is 168.49%. I think like that would scare me because that's just too high, right? But that's what I have to work with. Year to date, they've grown 44.50%. That is high compared to Europe. Europe was like around 21, 22, 23%. 45% in this last year, 2025. That's a great number, right? This started in 2003. Diversity is medium, I said, because unlike what I found in Europe, and we will see based upon my research in Africa and South America, but in Europe, it was a lot more categories. I would say like 20 to 25 categories of what they invested in. The African ones, they only had about like 10. And things are different here in Africa than in Europe. So in Africa, they focus more on like mining, and financials is big. So maybe financials is just big everywhere. When financials means big banking, but it's mining of natural resources. Could be gold, could be the chip things they make chips with for computers, platinum, silver, whatever, natural resources. But they also do the banking thing. But the things that they're low upon, there's not much investment in real estate, and there's not much investment in healthcare, which was different from Europe and what we know in America. Healthcare and real estate is a big thing. Remember, I think, let me go. Like the things that they're looking into, one of them was infrastructure, hospitals, roads, city necessities, university systems, agriculture. That's like real estate type of stuff, and health. That's why I think there's an opportunity if I was to invest in, or anybody was to invest in Africa, because that is an opportunity for a lot of growth. 5-year yield is 15 to almost 60%, max is 208%, and their total assets come up to $430 million. That's a good number. It's not chump change, but it's not a billion. Some places have billions. Then the second one I found was the VanEck African Index ETF, ticker AFT, and that one is a lot more affordable at $23. This ETF is weighted on companies that get their revenue majority from Africa. It's based on the NVIS GDP Africa Index. So this is another index. But this index is different because it measures the size of economies, gross domestic product, not equities and the market value of these companies. So it's not based on market value, it's based on how active these companies are having things sold and purchased, gross domestic product. This ETF does not offer dividends, which was very sad for me. But I still put it up here because, again, there's a scarcity of options that I found. Year to date, it's grown 51.45%. Again, that is significant compared to so far what I've learned about Europe. It started in 2008. Diversity is medium. Again, they focus on big banking and mining, but not healthcare and not, what was that other one? Real estate. 5-year growth, 30% more or less. Maximum growth, though, it is down almost 50% of when it was first started in 2008. I put that in red because that's a red flag for me. That's not good. That's not what you want. And then total assets weigh in at 73 million. That's like the least you would want it to be, right? And then the last one is called the Amundi Pan-African UCITS ETF. Ticker is this longer one, ETR:LGQM. It is much more affordable at $12.45. This ETF follows investments in large cap companies in Africa via management by Amundi Asset Management (SAS). It tries to replicate the SGI Pan African Net Total Return index's returns, and it is managed by a company in management based in Germany. So I think that's the difference and why the ticker is so long. The company is based in Germany. This ETF also has a dividend yield of nothing because they don't offer dividends. Their year-to-date growth so far is 30%, started 2016, so it's not even 10 years old yet. Diversity is very low. Because the way I understood it is they follow this one thing. Wasn't really completely sure, but it didn't give me options of like the different sectors that it followed. 5-year growth 46%, max 47, and then their total assets is 44.5 million. So some thoughts that I have is that the reality and when you're investing in an African market is that again the areas are fragmented. So it's not like you're following one huge economy. You kind of have to pick which one you want to focus on, especially if you're limited money like me. I could have focused on West Africa, Nigeria, and Mali, and Niger, South Africa, which tends, I'm not going to say South Africa, which I'll say is a strong market. Nigeria is also a stronger, older market. South Africa is a stronger, older market compared to Mali and Niger. Egypt is a stronger market, but they've been having difficulties lately because they depend on a lot of foreign aid. And then an upcoming market is East Africa, where Kenya is, and Madagascar is, and Tanzania is. So, and Ethiopia, Somalia, etc. Each zone is prospering differently. And mining, financials, tech is up, but healthcare, real estate is down. So I can't say that I found places to invest specifically in real estate and healthcare. And I'm going to talk about that in the next slide. So my plan is I'm only going to pick one, but I am going to pick one. I am going to invest in Africa because now I know I'm a little bit more educated about it. I'm going to pick this one and I'm very proud. I will say though, it's not what I wanted to, but I feel like getting something done now for the sake of like not freezing and wanting to do something and never do it because it's not, never doing it because it's not perfect. I can't wait on perfection. I have to make sure something is done and then I can tweak it as I go. But I'm picking EZA because it follows a older and more secure index in the continent as opposed to the other ones. Like this has more history behind it and more security. It's not a perfect market, but it has security. Because honestly, South Africa doesn't really have as much growth as like East Africa, but East Africa, I couldn't find anything. So this is like more of a steady market. It could have problems installing, but it's not an insecure market or highly insecure market. And it's the only one that gives dividends. And y'all know I'm a dividend person. Dividend yield is 5.02%. That's pretty good if you're a dividend investor. Again, I did realized that the dividend growth was high, very high. So that could be like a a red flag. But again, done is better than perfect and it's affordable. So that's why I picked that one. Others didn't give dividends and or they weren't diverse enough for me. And like that last one, it wasn't diverse at all. And then I'm going to keep a lookout for future opportunities. But 2026, I will be putting some portion of my investing money into EZA. And that's exciting for me. The final takeaway is that it's exciting to have a plan going into 2026. And yeah, there wasn't that much information. That didn't surprise me though. But what is exciting is that Africa seems to be turning to a place where it is progressing and progressing in a way with the pride that Africans have in themselves is going to be matched with their economics. And that is an awesome thing to be a part of. And I really want to see that. If you guys have any information to share or if you have any questions or comments, please put them down in the comments, and also like this video if you, especially if you made it to the end, and please subscribe for more notifications of when I post another Stock Market Saturday, which will be very soon. Thank you guys so much for hanging out with me, and I hope you enjoy the rest of your weekend. Talk to you later.